From global volatility to domestic growth cues, the markets are going through a crucial phase. Now, what to expect going ahead? Joining me to talk more on this is Vikas Khemani, who's the founder and CIO of Carnelian Asset Management and Advisors. Thank you for joining us on NDTV Profit.
Pleasure. Thank you very much for having me.
Sir, I want to start by asking you that, global markets are, and globally there's a lot of volatility with US, Venezuela, and a lot of uncertainty around. How do you think, how vulnerable are the Indian markets at this point of time?
So whenever this kind of uncertainty, arises, obviously the first reaction is volatility. Like if you remember, when the tariff issue came out, first, I think 1 week markets were gyrating up and down. Even US markets were up, down 5%, 3%, whatever, in very significant volatility. And then once the news is digested, it kind of settles down. Tariff issue is still around, but markets have moved on and found its journey. So same thing, I feel that this geopolitical thing is a new thing. Of course, we'll have to see how it develops. Will it go towards more scaled up conflict, or it will kind of find similar kind of tariff kind of issues? Only outcome we will know in some time. If the global, it scales up in a global sense, like if China gets involved and other countries gets involved, Europe gets involved, then it could be worrisome. But if it does not, then probably it will, in few weeks, few months time, it will be digested. So we'll have to see how it goes. But from the face of it, looks like that, US is trying to assure its power, claim its #1 position, or reclaim or reinstate, or at least reassure his #1 position. They kind of give a message to China saying that we are still #1. So let's see how it goes. But generally speaking, I don't see it, from the looks of it right now, I don't see it degenerating in a big way. But yeah, let's wait and watch.
With US bond yields falling and also Japanese yields being volatile, how do you think that will affect the markets, and this movement will affect the markets, and also and the FII flows? Also, when you come to India, a lot of FII outflows were there last year. So when do you expect them to return in 2026?
So I think US yield coming down is a very good situation for emerging market flows. If you study historical, 30, 40, 50 years of history, whenever US rate goes up, money goes away from the emerging market. And when they starts coming down, emerging markets do see the flow. For the simple reason, all emerging markets run current account deficit. Their dollar, whenever interest rate in US goes up, inflation comes at, currency depreciates for those markets, and then hence, you preempt the outflow. And same thing vice versa. So if US yields comes down, it will be good for emerging market. You will see in general flows coming back, and which is what was happening if you see post-pandemic when rates were taken up. That time emerging markets were receiving outflows, and so did India. Last 1 year when the rates are stable, still India is seeing outflow for the simple reason that in first India was overweight, China was not doing well. So in last 1 year, a lot of readjustment of weight happened from India to China, because overall flows are not yet coming, but China is doing well. So to that extent, realignment of flows, weights have happened in emerging market fund. I do believe that's by and large done. So if the interest rates come down, more money will come towards emerging market, and India will also see benefit of that. So I am quite optimistic that 26 you could see positive flows from FPIs in India.
And what about the earnings? Now it has been a tepid year last year. Do you think that the earnings will pick up this year?
Yes, I am quite hopeful, and we've been saying this for last almost 6-8 months. Very simple reason. Last year, when earnings started coming down, we had a situation where previous RBI governor had a liquidity squeeze coinciding with the general election. So that again further created liquidity tightening, which impacted corporate earnings with 2 quarters lag. So till September 24 it was fine. December quarter earnings started impacting. But the new RBI governor has infused a lot of liquidity, cut interest rates, has come out with credit growth policies in terms of boosting more credit growth. A lot of monetary stimulus has happened, which again has impacted the corporate earnings with 2 quarters lag. Hence, you see last quarter was good. Government's fiscal stimulus, both income tax as well as GST, also helps earnings recovery. So I think last quarter was good. I think current quarter will be even better. So we will see good recovery.
What's your outlook for the markets in 2026 and valuations as well? Also, do you feel that for the investors, this is buy on dip, sit in cash, and deploy when correction comes? What would be your outlook on that?
I think 26 will be better year than 25, and every couple of years we have similar kind of situations. 22 was similar year. 21 was a great year. 22 Ukraine war started, and we had very difficult year in 2022, and then 23 turned out to be a great year, right? So 25, in my opinion, is a similar year than 22. I do believe 26 will be better year than 25. Earning recovery, fiscal stimulus, monetary stimulus, nothing is wrong with India. Indian economy, economic growth is strong, tax collections are strong, capex is happening, except this whole, US tariff situation and geopolitical situation. So I think some point in time in this year, I feel whether it happens in Q1 or Q2, I don't know that the mood will settle down and you will see, markets doing well.
And advice for the investors, is it a buy on dip or?
See, again, you have to take, I am a big believer that vintage in market impacts, and I remember writing a note in 2022, second half of 22, that this vintage will be a great vintage to build, right? And if you see now, even after all this, negative news, 22 vintage is deep in the money and has delivered smartly. So investing is all about investing when everybody is scared, and as long as you believe in the long-term outcome. So I do believe that this vintage also will be very, very good, rewarding vintage. Now, whether you spread over 3 months, 2 months, 1 month, anybody's call, take your call. But use this time to deploy. I'm quite optimistic about equities in next 1 year, next 3 years, next 5 years.
Okay. And India has signed a lot of free trade agreements with a lot of countries. How do you see the whole situation, and how is it benefiting India? Which are the sectors, according to you, which will see a positive influence because of this, and also your overall sectoral view, and which are the sectors you're bullish and bearish on?
So I think with the whole tariff situation, the WTO arrangement seems to be falling apart, and hence there is a need to do bilateral trade deals, FTAs, with different countries. Otherwise, this whole order was fine, and so hence every country is doing, and India, being a very large, aspirant of global growth, participating in export business, global business, is doing FTAs with different countries, and which is a good development, and it should happen. And I guess same is being worked out with the US also. If that happens, that'll be great. I'm sure it will happen in some time. So I think it's all good, and generally speaking, I think India is a great story. We have very widespread growth in manufacturing, in BFSI, in consumption, infrastructure. So it's one of the, where there's a very widespread growth. Now, there could be periods when some sectors don't see those kind of growth, but that's fine. If you take a broader picture, you will see each of these segments will create massive wealth, massive growth. If Indian GDP goes from $4 trillion to $10 trillion, there's no way each of them will not participate, right? BFSI will become bigger, consumer will become bigger. So all of them will kind of do participate.
Okay, so any sectors you're bearish about?
I mean, technically yes, but generally speaking, I am not really, if you take 3-5 year view, I am really not any, sort of bearish right now. But yeah, I mean, you only choose the sector where you are more bullish, right? In that sense. So, but having seen a lot of correction in the stock prices and sector, like I was kind of very concerned about AMS plays. I was very concerned about defense plays. But you've seen a lot of corrections already taking place, right? Now, there also there will be some opportunities will be there, which will kind of become bigger. But yeah, generally speaking, some of the 3-4 sectors I mentioned are kind of positive.
So with the rupee weakening, a lot of commodities, gold, silver, and everything has really had a very good rally in the last year. So do you think that will be sustainable this year, and should investors look at these in deploying in these asset categories?
I think after such run, it's always a recency bias, and people tend to have more comfort after it is done well, right? I am no gold and silver expert, but I do believe that gold tends to move in spurts, for 3-4 years no return and then spurt side. So and current geopolitical uncertainty is adding to it. So precious metal, I think, in my opinion, best is behind, but who knows this year? I would assume that probably it might not do as well for sure. If it is positive this year, possible. But I think this could last year. Equities didn't do well, metals did do well. Probably this year it could reverse.
But it always surprises us.
Yeah, I mean, and you there's no marks for it. I don't think last year anybody said that silver will go up, 100%. Whatever. I don't think anybody said that. It's impossible to kind of predict, in my opinion, and I'm no expert. So, yeah.
What are your budget expectations in terms of capex, consumption? Where do you think the things could be done?
I think it'll look more of same. If you see this government's budget in last 10 years, it's no different. It's consistently same place. Fiscal consolidation, but keep good money for capex. Every year they have grown. Divestment, which used to be looked out, is no more relevant. And budget is actually only relevant for more seeing how much is deficit, how much is borrowing, how much is sort of divestment targets and all. Tax and all anymore, direct tax is still relevant, but indirect tax is not any more relevant because it goes through GST Council. So incrementally, budget has become less relevant incrementally from a policy guidance perspective. I think it's broadly just these 3-4 things market look for. Other than it's just a political statement.
Lastly, my question to you is that what has been your greatest learning and advice for the investors in general?
Avoid noise, avoid FOMO. Stick to basics, use common sense, and have patience and long-term vision. That's it.
Thank you so much for speaking to NDTV Profit.
Thank you.